So the fireworks continued for the S&P 500 and especially the Nasdaq 100, starting a new week coming out of the 4th of July holiday. Very seasonally bullish time of year seems to be playing out again. We're going to take a look at this period compared to prior periods of very similar patterns to see how bullish we expect to be in the short term as well as in the intermediate term, and then finally into the long term. So multiple time frames are going to break down today. We're also going to take a look at a big move in other markets that propelled the market today and what that means for us going forward. And then finally, our trade idea as a stock that's kind of exhibiting on its own level of what we're seeing on the broad market level. And we'll take advantage of that pattern, a really juicy, bullish pattern. So let's go ahead and get started. Today is Monday, July the 6th, 2020. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, let's go ahead and get started here. And let's take a look at the S&P 500 with the market forecast indicator. Nice little drive up here on the intermediate line, up towards the market sentiment line. Still not back above it, but looking like there's a good chance we can. And of course, that's really important to maintain any kind of bullishness. We need to maintain, a good run up above the market sentiment line. Unless your market sentiment line gets in the upper reversal zone, then you're going to have a period or time where you cross below it. You can see here both these intermediate pullbacks, or not intermediate pullbacks. This intermediate pullback, of course, crossed below it, and this one did too, and over here. But you can see, both of these pink shaded dips occurred with short dips below the market sentiment line. That when it was already up above there, we had a little bit of a dip there below the, just barely below market sentiment line that coincided with the pink dip, and of course this one too. Now we don't have the pink dip anymore, right? We have dark green shading and a green line. We're easily above the 30-day moving average. You notice we are back up above now, easily back above the 78% Fibonacci retracement level. So again, that's really important as well, and we are between the 0 and 23% level. So again, any moves up and down in this 20% is just kind of a noisy period until you start pushing that 0% up again, and then as you push it up, like we're doing pretty much for the Nasdaq, and that's been our bullish one. I mean, every day you push this up. In fact, I got to push it up more than what I had it today. So the more you push up that 0% line, that's bullish. And you can see now a 23% retracement drops down to the old high point, the old pre-COVID high point for the Nasdaq. And again, that would be, nothing burger type of move, right? It would just be noise. If we were to drop down to 9,700, 9,750 from 10,600, so almost 1,000-point drop, that would just be a noisy drop, right, to 23%. And you can see too, again, the pink shadings coinciding with the intermediate line dipping briefly below the market sentiment line. You can see it over here too. So be really important for us to get back up above it. The Nasdaq is back up above it, and they're both in the reversal zone. The Russell 2000 still below, and we're still in pink shading territory because of that. So something we need to kind of keep an eye on. The near-term line for the S&P is still up in the upper reversal zone. So very good sign from a near-term perspective. I think we get a good near-term run or two out of this up until that July expiration. We can see that's a good sign. Also, the momentum line has come out of the reversal zone, though it didn't hit extreme lows this time as it did others. You can see how brief that momentum line drop was, essentially because of these two really small trading days, small trading range days there. Again, look at the Russell 2000, and we're not quite there. You notice we're continuing to get some long upper shadows, relatively long upper shadows in the Russell, and that's what's actually keeping the intermediate line below the market sentiment and the near-term line down too. But in this case, it brought it down finally below 50. Positive development, you are above the moving average, so it's green, and you are back above the 20. We dipped below the 23% line a couple of times, came right back above it each time. And we're also back above the 62% retracement of the drop, right? So we had cleared it only to hit the 78% line, came back down below, and was kind of flirting with the 62 level. At the same time, we were flirting below with the 23% level of the retracement of the rally. So it's very good from a bullish perspective to be above both those lines, and so far so good. So bullish market forecast patterns all across the board. Would be more bullish if these other indexes follow the suit with the Nasdaq and get back up above. And we've been talking before, and that's been the case. The Nasdaq 100 continues to be the leadership for this bullishness, and I expect that might continue to be the case for quite a while. Very similar to kind of like late 98, full year 99, beginning of 2000, despite some pullbacks, but that pretty much provided some leadership throughout most of that period before the market finally peaked out there and valuations got extremely high there at the end of 99, beginning of 2000. Of course, the 10-year market returns from that point going forward weren't so hot. So, whether or not we'll get something similar here, the point being that while we're bullish and while we're in this trend and while this is providing the leadership, then we know what we got and we'll continue to trade what we got and take advantage of it. You'll see here again with our trade idea of the day later in the video. Alright, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon right here, hit the red subscribe button that pops out. There's also a button down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also hit the thumbs up icon down below the video. That tells us two things. Number one, you liked our video today. And number two, you want us to do another one tomorrow. It's a quick way to give us feedback. It's a quick way to let us know you like our videos. You can do that right now while you're watching. Of course, if you don't like our videos, you don't have to click on anything. Also comment what questions or comments do you have about anything I talk about in the video today. Post that down below as well. Join our website at marketscholars.com. There's a link popping out right there at the top right corner of your screen. Click on that link to subscribe to our site for free. Follow us on Twitter for more content between videos from day to day, and join our Market Outlook Facebook group that we've created. Also, if you're watching our video here on our blog page, remember there's an easy button up here to the top where you can subscribe to our site for free. Also one down at the bottom. So click on either one of those. Also, check out our Market Outlook live video. Every day I do the Market Outlook. I do a live video at 3:30 Eastern time for about 15 minutes. We review all the trades that we've done. In past videos, we put on today's trade idea before the market closes. So make sure you check that out. That's available for all of our monthly subscribers. Also, all of our trading rooms are also available for our monthly subscribers here. You can see that you have access to all of our trading rooms with our monthly subscription plan. Of course, our premium subscribers, you can see the difference between the two here. Our premium subscribers get access to all of our premium tools as well as our community, all of our class forums that we have, as well as the rest of our community and custom tools that we offer. Finally, engage with us down here on social media. Click this heart. It opens up a window. Hit that like button. Click this thumbs up. It takes you to your Facebook page. Hit that like button there as well. If you notice that we benefit from this, the more likes these posts have, the Twitter and Facebook will promote our content to all of our followers as they have more engagement. You also benefit from this because Twitter and Facebook promotes content in your timelines from the accounts that you engage with the most. We try to make it really easy for you to engage with us here. Alright, let's take a look now back at the charts and look at the weekly Hakinyashi candle for the S&P. That's a nice bullish, so far, bullish close. After multiple transition candles, we've popped up. You can see the golden cross continues to move higher. We're just getting to 2% on the PPO. It's obviously not nearly as high as it's been. So we've got plenty of room to run before we get to an extreme level on the PPO, and probably not going to get to an extreme level as that was pretty strong there. We're probably going to peak somewhere below that because that tends to happen, right? You get an extreme level here and then the next peak ends up being below. Now granted, that took months, but the next one came in below the peak, and even though we got the slightly higher highs, which I expect we'll probably end up doing something very similar here. Now I don't think that leads into this horrible quarter like we had in the fourth quarter of 18, but this kind of gives you an idea of how this typically works. We can grind higher. We can have a short pullback and grind higher even after that. So very strong move. The Dow is looking very strong. You can see that the Nasdaq Composite. Look at that. In fact, let's look at the NDX. Whoops, NDX, and you can see. Look how strong that candlestick pattern is. I mean, its PPO is extremely high. In fact, if you were to kind of zoom out on this and go back, the prior years, you can see. In fact, here, let me do it this way. Let's go where are we at right now? This is between the gap between the 50 and 200 day moving averages, or 10 and 40 week moving averages. We're at 10.18. So if I were to change this here to 10.18 and hit OK on that and zoom out, you can see on a 20-year level, the last 20 years, basically this bull market that we've had and the bull market we had prior to that, we were never this bullish, except for here in 2003. Here, let me do this, sorry, so we can see this a little bit better. So price axis, we use a long scale. We won't fit the high and low. And we won't fit the studies either. There we go. So if I were to zoom out here, you can see that we just came close a couple of times there before we had some weakness in 04 for a while. Again, that was going into the 04 election. Remember, that was a big toss-up in 04, the re-election there, coming off the 2000 election. We had a big discussion on that in our portfolio management class last week at Market Scholars. So, you know, again, you go back to all the way. In fact, let's see if I can go how far back I can go. We have to go back we have to go all the way back to the 90s. And just to kind of show you, again, this is apples to apples, to kind of show you how bullish 98 was. So again, that's how bullish we were in 98 before we had that drop, which is pretty sharp. I mean, we have been pretty bullish, but by the end of 98, so again, this is very similar now. It doesn't look that way, but it's a very similar period here as we got in the late 98, and you can see that's when we really took off. Going into the beginning of 99 and then all the way through to the March of 2000. I mean, look how strong the momentum got. Again, lots of Y2K pulling forward and very similar pulling forward going on right now. So the question is, are we going to bust through this? Are we going to bust after kind of this pop down? It was actually more of early 98 where we got, you know, after a big move higher, a pop down, a quick pop down. Not obviously not as quick as what we had there, but then back up to this strong level. Very, very similar type action to the late 90s. Not that that means we're going to tank tomorrow or next week or next month. In fact, it's kind of more likely we'll get a good chance. In fact, I tweeted this out. Earlier today. This one here, this chart, the new highs got up above this 90% mark. It looks like it's about 93 is the level. That's a high point. I mean, obviously, we were there over here, but that's a pretty sharp high point for New York Stock Exchange highs and lows. But you can see when we got there, when we had this kind of big, you know, drop in highs and lows, and we got through that pullback area that tank charts as posted here, and then we got up to 90. We had some weakness there, but we maintained some strength going into, you know, a couple week periods in 2019. Some pullbacks in this area. These are intermediate pullbacks on the market forecast line, and then you can see how we finish. But that was from the beginning of 19 to pretty much the March of 2000. That was over a year. And so, you know, again, because we got above 90 like we did here, very good chance that we get another good year-long move at least. I don't think we'll get a 34% drop in 4 weeks again at the end of it, but a good chance that even with some intermediate pullbacks mixed in, that we stay pretty bullish here for a while because of how strong the beginning of this run is. Again, it's very similar, like I mentioned in my tweet, it's very similar to seeing a bullish cluster on the market forecast chart right at the beginning of an intermediate run, like something like over here when you see a cluster over here. We didn't quite get a cluster right there, but we came pretty darn close, and that was right when the intermediate line gets above 80, and that helps solidify a lot of times a good strong run. We didn't quite get one here on the NASDAQ either, but we got pretty close to one. And if you take a look at the weeklies, the NASDAQ's getting pretty close to one right now on the market forecast, and you can see the S&P kind of is too, and it still really hasn't had the dark green shading and green line effect yet. And of course the Russell 2000, it's still got some room to run. It's still actually light pink shading and yellow line. It's got to kind of turn itself around and get the dark green shading. But that kind of tells you how overbought we are. We consider this strong move that we've had, but you always have to put the moves in context of the prior. And you look at this and it's like, man, we're not really overbought on stocks at all from a long-term perspective. That's why I say we could have a good year or two long run out of this very easily. Maybe not in the short term because of how overbought we are, but you can see how a good long run can establish with dark green shading and green line coming out of it, like we have on the NASDAQ, and like we're starting to get on the S&P. We're just not quite there yet, but we're getting closer and closer to this. We had dark green shading, but we had a couple of weeks that's kind of been messing around with that intermediate line. But once it pops back up, and it's we got the green line now because we're well above that moving average here, and it's rising, and they're really darn close to the intermediate line turning up too, and you'll finally get the dark green shading and the green line on the weekly chart, and can really get us going here. Let's take a look at the green line, 3 green arrows, and now we do have the 3rd green arrow finally. So again, it kind of tells you how overbought we are when we're just barely getting a green arrow on the MACD. So the MACD is crossing above its moving average. It's coming up from below 0. The stochastics is crossing above 60. It's coming up from a phantom green arrow here, a peak that this barely dipped its toe under 40. Not enough to change the trend. The MACD dipped its toe below 0. Again, not enough to change the trend. The average didn't come down, and the average barely dipped below 40 itself as well. So, so again, back above the 8-day moving average. The 8 days rising away from the 17s. You can see with the MACD itself rising, getting above its moving average. You can see other oscillators like the RSI and CCI, getting back above 100, getting above 60. That's on the S&P. The NASDAQ is, see how strong it is, getting above 670, and for the first time getting above 200. And you can see it kind of got above 200 mid-cycle there when it got above 70 on this run. And we were pretty well into a run by that point. And you can see how we continue to run for another month or two coming out of that. So a very strong pattern as well. From a DMI perspective, the negative index has dropped below 20, but the positive hasn't dropped or crossed up above 30 yet, and the negative hasn't dropped below 20 yet. So even though it has dropped below 25, so it's not. You can see no shading here. We get the shading when the ADX is rising, and the ADX is really flat. So it kind of shows you that we haven't been very bullish. We're just barely getting above. The bandwidth is relatively low. We're just getting back above 75 on the Bollinger percent P. So getting up into the upper quartile of the Bollinger bandwidth, rising moving average, rising up towards the top end of the Bollinger of the value area. You can see we are getting a breakout on the Qs up above its value area. In fact, if you take a look at the Keltner channel here, let's do this one. And you can see not only are we popping up above the Bollinger Bands with a rising bandwidth, we're also popping above the Keltner channel. So very strong move. So you'll see pretty soon a green dot pop up, which can be pretty bullish when you get that green dot. That's when the Bollinger Bands pop out of the Keltner channels. We had been inside of them, and now they're popping out of them. That's a squeeze play. That's a very good sign. We've been kind of flat here. Again, with the Bollinger Bands inside, and again, a squeeze play would, with a positive momentum would get us going back in a good direction. So not nearly as overbought when you look at all these indicators as you think, heading into, again, a seasonal bullish time of year for the next week or two, heading into July expiration. Finally, here's the Ichimoku cloud. Still pretty noisy down here, but back above the blue line. The green line still hasn't crossed above the blue line itself, so again, kind of shows you, and then you can see the red line and the move it's going to make over the next week or two to get to stay up above the price and stay bullish. So that's a pretty decent move. That's you're looking up to like a move up into here if it maintains that kind of gap that it has. Again, that means we're approaching these highs, which I fully expect us to start looking at again by July expiration, which is the typical seasonal peak of the year. Before you start to get some volatility heading into the October earnings season, the beginning of the October, about a week before October expiration. Let's take a look at the intraday chart, and you can see that that We filled in the gap. See, we've been filling in gaps, and that's a good sign, but we haven't filled in today's gap. But today's gap could be, a little bit of a kind of a breakaway gap. We are breaking through these highs. In fact, we broke out and closed above all these highs. We didn't have a whole lot of, extra volume here. If you take a look at the volume for today, it was, well below average, 61 million, very small range. 2 points, not including the gap. When you include the gap, 312 up to 315, so about just more than 3 points. So you're still below average when you include that. That is actually included in the ATR here. So when I look at the ATR chart, this one, you can see both those numbers, 61 million coming down. That number of 5+ points coming down, dropping below the 2% mark again. Starting to work our way towards an established bullish trend when it falls back below 1%. 1%, if it were to get up to 340, 1% is a 3.4 ATR. So that's about down to this point for us to get to, that's how much it has to go down. And you can see where the volume was down here. And volume just naturally gets lighter as price gets higher. Volume naturally gets lighter. So it's a good sign for the markets to get some moves to the downside in those. If you take a look at this daily percent price move, as we've mentioned before, when you get the historical volatility above implied, that's a sign of a bottom. Anytime you get that, it's a sign of a bottom. So it's a very, very good signal that the implied has dropped below that. You would expect that historical start to drop below the implied. You can see the gap that we had here, a couple of good gaps in a row. Today is not being filled in, and some good. Don't be surprised if we don't get some weakness like in the next day or two, because we've been so bullish here. Maybe a down day or two before we continue a good near term. It might not even be enough weakness to bring the near term line below 50. Remember the Russell 2000, I believe the near term line actually is still below 50 there. So I'm not expecting a lot of weakness, hardly at all. Even in the short term. Again, the VIX, you can see the VIX kind of flattening out today relative to VXV in the back month, so you can kind of get an idea that that's a pretty flat VIX. At 2789 is where the VIX is. When you look at VIX 3M, it's at 3098. So it's a really good 90% mark. Again, getting below 90% is where we solidify the trend. It's like getting below 1% on the ATR, on the relative ATR. So we're not quite there yet, but it also kind of shows again how not extremely overbought we are. Even if I take a look at linear regression here for equities, on the 1-year linear regression, you can see we're just barely above the midline. We're not anywhere close to the 1 standard deviation. If I take a look at other common timeframes like 5 years, we're just barely crossing the midpoint line, and then with an upward trend. And if I look at the 10 years, then you can see, again, not anywhere close. So, if this is like 97, 98, then you can see how we've got a year or two of, even with some intermediate pullbacks mixed in, we've got opportunity for QQQ, which actually is pretty high on this. Look how high it is there. But we've got some opportunity for this to really push us out and lead us up to the upside for a longer term. If not in the next day or two, if there's some weakness here, but in the longer term, like for the next year or two, we are hardly showing extreme overbought technical signals here. All right, so to summarize, before we look at some other relationships in other markets besides the U.S. stock market, just to summarize our outlook here, our technical outlook, strong bullish trend that doesn't look like it's ending anytime soon. We might get a day or two of weakness, maybe not even enough to bring the near-term line down below 50, but I think we can, we have a good seasonal we got a lot of factors that can help us make the seasonal move higher towards the middle of July before that volatility will kick in. But I don't expect any significant volatility. Maybe as we get closer to the election cycle, as long as there's any kind of doubt as to the certainty of a result from that cycle, because that's what the market doesn't like, right? It doesn't, the market doesn't really care one way or the other. It will start to price in who wins after the fact. kind of like what happened with our prior election. But going into it, it prices in certainty or uncertainty. And the more uncertainty there is, the more that volatility will kick in. But I don't think it'll be anything trend changing. It'll be very similar to the intermediate pullbacks we got in 2019 that is stuck in the middle of what was a good long run, like very similar to what we can kind of see here, coming off of a sharp low point, not as extreme as what we saw, but pretty extreme. What was pretty extreme before we saw this one. We had a big run up, then we got some volatility, and then we took off coming out of it, and can very well see some ups and downs in the volatility. It's not like we went down, but we had some downs and then good moves to the upside mixed in before we finished the move with a strong move higher. I see very similar type moves happening again. So what do you think? Do you agree with that technical outlook? Do you disagree? Let me know in the comment section below, especially if you disagree. What are you seeing that either makes you a lot more bullish than what I expect, or a lot more bearish than what we're looking at here on these charts? All right, now let's get to some of these other markets. And the big mover, the big news of the day was the dollar. Look at the drop in the dollar. It had been flirting with resistance at the moving average at the 38% retracement. We had been coming down from it late last week, and then today breaking back down below the 23%. In other words, making a new leg lower is what you would expect out of this. Now, granted, it's only one day, so we'll see if we can solidify that next day or two. But it's a very good sign that we'll continue this trend. Dark pink shading, red line. Remember, from a weekly standpoint, we're just starting. From a death cross environment, we are just starting with this death cross over the past few weeks. So, if we get something anywhere similar to what we saw in 2017, early 18, that was really bullish for equities. 2019 was pretty bullish, and you can see the dollar's actually up. Imagine the dollar being down in the moves. And so I did show this chart on Twitter as well, the relative strength of emerging markets to the S&P 500, and look at that big breakout above the 200-day moving average of the relative strength line. RSI getting above 50 for the first time in a while. We had that little, close to getting above 60 over here back in late 2018, only to fail at the 200-day moving average, and even the 50 even got above the 200-day moving average briefly. MACD got positive, even though its moving average never did. PPO never did get positive, but look how strong both those lines. Very strong momentum for EEM right now. Very similar to the end of 2018. But if you remember, the end of 2018 was a very bearish time for the markets, not a bullish time. And so this is a little different, and this is actually a really bullish time for equities, very similar to 2017, where the dollar made that big drop. So, we're really seeing an opportunity here for emerging markets to finally make some headway. You can see over the last 10 years it had been very bearish compared to U.S. equities. Before that, it was very bullish. So, are we going to start to make another run here? Back up to the upside. It looks like we're at least getting the beginnings of what's another 2017, early 2018 on our hands. If I were to pull up the comparison chart, you can really see it here. And let's just look at you can see, look at that emerging market move the last few days. And QQQ is still just really killing it. But if I just look at today alone, so let's go to July 6th and just look at today. Emerging markets started the day strong, Qs started the day strong, and finished. Small cap started the day strong, but then petered out. Remember, that's a little bit more reflective of the economy. So this is a weak dollar driven. Look how strong the dollar dropped down. Long-term bonds dropped down. That's a good sign for risk appetite as a whole. If I were to take a look at the move, the charts for long-term bonds. Again, we have dark green shading. We have a yellow line. We don't have the dark pink and red line yet, but we are back below the 23% retracement level, that big bullish move that it had. This is where you can see it here if I zoom out. That big bullish move that we've essentially had coming out of this. You can see that there's an opportunity for some bearishness. It just hasn't. We're still above the market sentiment line. It's got to get back below it, and we're not quite there yet. Here's the weekly chart, and you can see, the weekly chart, the intermediate line has gotten below the market sentiment, and we are starting to pull back a little bit. It's only one day into a week, this weekly move, so we'll see how that plays out. Of course, that's not necessarily the case for gold. If the dollar continues to be weak, that's actually going to be bullish for gold. So you can see the strong long-term trend it's got going on, and even the daily chart getting a bullish cluster or an overbought cluster, at the beginning of an intermediate run. Very good sign that we can get a good extended intermediate run out of this for multiple months. So we'll see how that plays out in gold. Again, that doesn't necessarily mean that that people are buying gold as a safe haven. They're buying gold because the dollar is so weak, and that's generally a good sign when the dollar is weak for risk appetite as a whole. Let's take a look at commodities. I want to take a look at commodities here. Here is the commodity basket. Pretty much crude oil is a big factor here, but gold also is too. Again, it's kind of a function. Sorry, wrong one. It's kind of a function of how the dollar's doing, and you can see, again, breaking up above the upper Bollinger Band. Here, let me do that squeeze chart again, so you can see the Keltner channels as well. So you can see we're above the upper Bollinger Band, but we're not quite above the Keltners. The Bollinger Band was really low. We have an opportunity for some momentum and a breakout, a kind of a squeeze play here. And of course, as you saw with the Bollinger Bands, you can see that we've got a big gap to fill here to the upside for commodities. And again, these are lagging, so it's just a sign that we are established into a bullish trend if we can get commodities going higher. I don't expect them to outperform. They might outperform here and there a little bit, but it's again a function of the weak dollar and where we are in this bullish cycle that we finally starting to get commodities participating. We don't need them to participate at the beginning. We just need them to participate and then kind of bring up the rear, so to speak, and get a good bullish move out of here like we're seeing in equities. And we're not anywhere close to these pre-COVID highs, so it's got a lot of room to make up. And the fact that it's on pace for at least starting a pattern of being able to do that suggests, if you look at the Ichimoku cloud here for DBC, you can see we are above the cloud, and we got a bullish pattern here and a strong bullish trend. So this shows that we can be bullish here for a while, and that just again solidifies the type of trend that we're on here. All right, now let's take a look at how the sectors performed today, and it was quite the move too. So let's actually just go to today on this kind of interesting patterns coming out of today's sector performances. You can see all your QQQ type sectors, discretionary, communication services, technology, all leading. But you also see with the rise in yields, you had a really good move in financials. So finally, financials have been so beaten up. They had a decent move today. Even though the dollar was so weak, you can see energy was down and so materials was down for most of the day until a late rally at the end brought it up higher. On the other side of the spectrum, these interest rate sensitive areas like real estate and utilities really struggled with the rise in yields. And you would expect them, if yields do make a run for quite a while, here, let's pull that chart back up. If yields are make a run for quite a while here, you would not expect utilities and real estate to do very well. So we'll kind of keep our eyes on this rising PPO, which is still extremely negative. So you can see how much yields have to move just to get back to zero, just to fill in this gap between the 50 and 200-day moving averages. Yields have quite the move to make. So that would be very bullish for financials and very bearish for utilities and real estate. Now keep in mind, if you look at those sectors and come here, and let's go back to that kind of October 26th time frame of 2018, kind of where a lot of those areas really peaked, all the way to now for that matter. You can see utilities and real estate had been pretty bullish going into 2018 COVID because of the drop in yields, right? They had done really well. Of course, technology, you can see QQQ, and you can still see like discretionary and communication services really taken off. This is a QQQ-led market, but you can see now that utilities and real estate are starting to lag. because you would expect them to really lag. And look at financials; they've been such a weak performer. XLK is up 54% since that mid-October peak. Financials is still down, right? Industrials has barely crossed zero, but financials are still down, so they still have a long ways to go to take advantage of rising yields. All right, so let's take a look at taking advantage of this QQQ type rally. Let's take a look at a stock that had its own little breakout today. First Solar, look at that nice, good bullish move. Dark pink shading or dark green shading, green line today. Look, it's got 3 green arrows on its chart today. There's those 3 green arrows, just barely getting a big, strong volume. You can see on the 2-line version of the chart what it looks like here. Nice little move higher. Got lots of potential to the upside. You look at the Bollinger Bands, you can see how we're potentially getting above the point of control, working into the top half of the value area, if not beyond, getting up above. In fact, taking a look at that same squeeze pattern here, you can see how you're getting up above the upper Bollinger Band, and you got low bandwidth, and you're still inside the Keltner channel, so there's still an opportunity to run and be even more bullish from here. You look at its DMI, and you see that we broke up above 30, and we're already below 20, but you broke back above 30, so strong bullish DMI pattern. The ADX is just barely above 20, so it's hardly strongly overbought. You look at its Ichimoku cloud, the trend strength indicators. You see that we're back after kind of being noisy here briefly. We're back up above to this bullish pattern, easily above the bandwidth, and you can again see how far up it would need to go to stay up above the red line, to stay up above that level. Let's see here, what was the other one? RSI and CCI for First Solar. You can see getting above 60 again, getting above 200. Very bullish patterns there. So we're like, okay, let's take a look at a directional bullish trade opportunity. And so what we did was we actually came out and did a bull call spread, but instead of going out to the 60, there's no 62.5 here. I guess once you get to 60, it goes to $5 wide. So we went out to August with earnings in before then, and said, okay, let's sell the 65 and buy the 60. So that gives me a little bit of a let's see here. Let's put it into Market Outlook. There we go. So that's where we got into it earlier today during the Market Outlook Live. It's up a little bit since we got in, about 28 bucks or so. And you can see my maximum gain is actually outside. So we position size smaller because technically my exit rule tells me to get out right now. But I want to give it the chance to, because I don't have a 62.5. Otherwise I would have sold it, and it would have been in the 1 standard deviation. So I'm being a little bit more aggressive. But for that aggressiveness, I'm risking 350 bucks at most. A little bit, probably more likely, probably a couple $100, maybe 150 to 200 bucks. About half of that, if this breakout kind of fails and we go right back down, then it looks like we can get out with half of that loss for a $1,600 reward. So almost about 8, 9, 10 to 1 reward to risk ratio, over 5 to 1 at worst. That's a pretty decent opportunity for a stock that's looking really bullish and has a chance to be able to take advantage of this bullishness in this area, little consolidation pattern and a bounce similar to what we had over here. We'll see if we can get back above market sentiment and stay above it, and see how long that can take us. All right, well, that does it for today. Again, thank you very much for watching. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen that goes to our Market Outlook forums. Ask any questions or comments with any new threads. Reply to other people's threads, and let's keep this conversation going before our next video. As always, thanks for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon. Comment on our video below. Follow me on Twitter for more content between the videos. And join our Market Outlook Facebook group that we've created, as well as our website at marketscholars.com, like I showed you earlier. Have a great rest of your Monday night, everybody, and we'll see you all next time.